So let's talk about a trading strategy that a ton of people use. It's called breakout trading. Now, I know that might sound complicated, but I promise it's actually pretty simple once you get the hang of it. All it really means is that you're watching a stock or crypto or whatever you're trading, and you're waiting for its price to make a big move. Specifically, you're waiting for it to break out of a price range that it's been stuck in for a while. Think of it like a race car, revving its engine at the starting line. It's building up energy, and you're just waiting for the green light so it can finally take off. That's the core idea here. Why do traders even bother with this? It comes down to one word: momentum. When a price finally breaks through a long-held barrier, it often unleashes a powerful burst of energy. Buyers or sellers who were sitting on the sidelines suddenly jump into the market, pushing the price even further in the direction of the breakout. For traders, this is a huge opportunity. Before you can even think about trading a breakout, you have to understand two of the most important concepts in technical analysis: support, resistance. Let's start with support. Imagine a stock's price is falling. It hits a level where buyers suddenly rush in. A great deal. Buying pressure stops the fall and often causes a bounce. That level is called support, a floor where demand holds the price. Now flip it. Resistance. Imagine the price is rising and excitement builds. It hits a level where sellers take over to lock in profits. Selling creates a ceiling the price struggles to break. It can hit and fall back multiple times. That ceiling is resistance. Supply resisting more upside. A real battle between buyers and sellers. How do you find these levels? Simple. Look for obvious turning points. Find areas where price repeatedly peaked. Draw a horizontal line through those peaks. Resistance. Draw a horizontal line through those lows. Support. Okay, so you know what support and resistance are. Now comes the exciting part: using them to spot a breakout setup. What you're looking for is a period of consolidation. This is when a stock's price gets squeezed between a clear support level and a clear resistance level. It's not making new highs and it's not making new lows. It's just trading sideways, moving back and forth in a predictable channel. On a chart, this can look like a rectangle, a triangle, or a flag pattern. The specific name doesn't matter. The price is coiling up like a spring, building tension for its next big move. The longer the price stays inside this range, the more times it tests support and resistance, the more powerful the eventual breakout will be. Traders place bets. This quiet consolidation is the calm before the storm. One critical factor during consolidation is volume. You want a massive volume spike exactly when price breaks a level, resistance or support. A big volume increase confirms conviction. Ideal setup: well-defined support and resistance, both tested multiple times, sideways action between them, then a decisive move with huge volume. When these line up, alarms should go off. Classic breakout setup: new trend beginning, get ready to act. Patience during the setup is key. Wait for the market to come to you. You've identified the perfect setup, the price is breaking out. Now what? This is where a lot of new traders make mistakes. They jump in too early. You need to wait for confirmation. A true breakout isn't just price poking its head above resistance for a second. For longs, see a convincing close above resistance. For shorts, a convincing close below support. Once confirmed, enter the trade. Place a buy order just above the broken resistance. But first, think risk. This is the most important part. Set a stop loss just on the other side of the breakout. Let's walk through a simple example. Support at $9.50. Resistance at $10 for 3 weeks. On huge volume, price shoots to $10.10. It closes at $10.15. Confirmation. Enter at $10.16. Stop at $9.90. Your risk is 26 cents per share. Pick a target like $11, risking 26 cents to make 84. Beware the false breakout. Price breaks, everyone jumps, then it reverses and traps late entries. Wait for a close outside the range and a big volume spike. Don't trade breakouts in choppy markets. Align with the broader trend.